Let's take the discussion forward with Ashish Jain, India Mobility and Materials Analyst at Macquarie Capital. Ashish, great to have you on the show. Thanks for joining in. So, in a broader context, this is a market that's hungry for growth. And largely speaking, the auto sector has not delivered large parts of the sector, barring stocks like a Mahindra and Mahindra. And then we've had brief flashes of a great rally, let's say on a Bajaj Auto. But otherwise, growth seems to be missing. Do you see that changing anytime soon? Let's start with the PV space, where I don't remember. We've been looking at anemic single-digit to flat trends for the longest time.
Thanks, Surabhi. Thanks for having me on the show. Like you rightly said, fiscal 25 has been a tough year for PVs. We started off on a slightly weaker footing. We did see a very solid spike during the festive, the 20-25 days of festive, and then things have been southward after that as well. But I would want to contextualize this. If you look at the longer-term growth rate for PVs in India over a 3-year, 5-year time frame, it's been in the range of 5 to 6% CAGR. And some of the slowdown that you saw in fiscal 25 is also because the preceding couple of years were very, very strong. We witnessed 15%, 20% kind of growth post-COVID. And if I look at the data, from let's say fiscal 19 to fiscal 25, we have grown in term with the longer term trends of 5 to 6% growth. So honestly, some of the growth slowdown that we saw, was expected. Yes, it is further accentuated to some extent with slightly weaker demand in the entry segment, which I think is partly a function of income levels, with the entry level customer. But yeah, I would say F25 has been a bit muted, but not very disappointing versus what we were factoring, at the start of the year.
Ashish, on PVs, barring Mahindra and Mahindra, it's been an outlier, best in class. But barring this one today, for instance, Maruti reports numbers, as Hyundai as well. Would you be willing to, look at a buy on any of these stocks, hoping for a revival or a turnaround? We all spoke about this 1 lakh rupees in the hands of the common taxpayer at the end of the budget, but it needs to show up in numbers, and so far it hasn't.
Right. So, I would approach it very stock by stock. On a top-down basis, we still think fiscal 26 will be low single-digit growth for PVs. We are factoring around 3 to 4% growth for the industry on an overall basis, and that does factor, like you said, some benefit of the income tax cut. But within that, we still like Mahindra and Mahindra. It has been our top pick, and we think it will continue to benefit from model cycle tailwind, which has been quite favorable for them. And now even EVs, EV launches will also add to their volume growth. And in addition to that, M&M also has a tailwind from fairly strong tractor cycle as well. So M&M is what we really like in the PV space as of now.
All right. Hi, Ashish. Good morning. Good to see you on the channel, and thanks a lot for joining in. We have a couple of other sectors of interest as well, like materials. But for the time being, let's stick to autos. We have another IPO that's coming in from the EV space. That's Ather. We know what happened with regard to Ola. There was a lot of interest, and then investors, they bought the brand because things didn't really pick up. Now you have another IPO that the street is looking forward to. A relatively smaller player, but financials are relatively better, I would say. Your take on the IPO, what kind of valuations should investors be looking at? Do you think it'll be far better?
Thanks, Nigel. Thanks again, and good to speak to you. So clear, honestly, valuations and all is something I would refrain from commenting, but do want to make a couple of points here. One, Ather in the last few quarters have seen fairly strong traction with some of the new launches. If I look at the Vahan data for April month, which is a publicly available data, their market shares have improved to around 14-15%. So clearly, they are seeing strong traction, and we did, kind of attend their analyst meet. One of the very interesting points which the management said is currently nearly 2/3 of their volumes are coming from South versus around 1/3 for the industry. And going ahead as they expand into other regions, their distributions into the other regions, they expect to kind of do well from a volume point of view. So I would honestly leave it at that as far as Ather is concerned, given we are not kind of covering the stock at this moment.
What about other two-wheelers, Ashish? I was looking at the price on Bajaj Auto. It's come off significantly, right? From levels of 12,000 to now, I think last we checked it was, we're talking 8,100 this morning. That's a 35% decline from the peak.
Yeah, so in two-wheelers, our top pick has been, TVS, and we continue to like TVS. They have gained market share in scooters, in motorcycles. Exports also have, recovered quite strongly for TVS. And I think it's one company where, in spite of whatever commodities are doing, we are convinced of a margin expansion. So that remains our topic. Coming to Bajaj, I think two things have happened for Bajaj. One, the traction for their CNG motorcycle has been slightly subpar versus what we were factoring at, at the time of launch. And secondly, even in 125cc, which remains, a very compelling segment for Bajaj, we have seen heightened competition with production normalizing for Honda. So there also they have lost some market share. Having said that, we like their traction in e-two-wheelers. They have done really well to scale up volumes. They're now the sector leaders. So I think, near-term Bajaj stock could remain range-bound. Also, one thing from an export point of view, if you look at the recovery in exports, TVS actually has done much better than Bajaj in terms of the trajectory of recovery. So there has been some disappointing on CNG and exports, partly offset by strong traction in e-two-wheelers. But yeah, we'll stick with TVS for now as far as our two-wheeler pick is concerned.
Okay, so TVS in two-wheelers, M&M in four-wheelers. I go back to that growth question, Ashish, just in terms of a pickup, and we've not even discussed CVs because, again, I don't remember the last quarter, we really saw a move on the CV cycle with the Ashok Leyland's numbers. Stocks completely sort of gone off the radar. Do you see any of these pockets turning around soon? Tractors, absolutely, and tractors have started showing that pickup, which is why M&M is your top pick. But apart from, M&M and tractors, anything else?
Yeah, so if you look at Vahan data for April, it's just like 3 weeks into the year, but still, two-wheeler is showing a decent recovery, on a month-on-month basis. So I think that's the positive sign. Again, too early to call out a full year thing, but for the full year, we are factoring around 7-8% growth for two-wheeler. And we also believe that two-wheelers will be the bigger beneficiary of the tax cuts that goes effective April this year. So we are quite constructive on that space, like I said, led by led by TVS. And as far as, CVs are concerned, last year was a bit lackluster. I think first half, the bases are low. So that would make the headline numbers look decent for CVs. But yeah, on a full year basis, we are still sticking to 1 to 2% kind of growth for CVs as a segment. And with commodity doing what it is, we could also see some margin pressure at the margin. And hence, clearly CV is not something which is our focus at this point of time.
All right. Got that. Thank you so much for joining in, Ashish. Good conversation. That's the auto space. But